Welcome to the Tradier's Trader's Edge. I am Jim Iuorio. That's Iaccino. We just did the rundown and we talked about it's not unusual, you said, and I actually made the request to sing it like Tom Jones the next time you say it. Can you sing? Have you ever been able to sing? Has anyone ever told you you had a good voice in your life?
No, once I was told by somebody that, wow, you can carry a tune, which is a way of saying you can't sing, but you got this one thing going.
But you got, yeah,
Right?
the pitch is fine. It's
Yeah, it's
just,
like somebody saying, this is like a chef telling you this is a great peanut butter and jelly.
it's outstanding.
Yeah.
Yes. All
I
right.
want to say we seem to have lost our entry where your head is above mine.
Yeah, I
And
know
I
that
don't
pisses me
know,
off.
maybe if everybody in the background took it seriously, that made me mad. Because anybody who knows us knows I'm, statistically above you in every category. But
Clearly. Oh,
clearly,
for you guys just turning in, I had just introduced him on the other show we did as my
yeah,
sidekick, the Robin to my Batman. So that's why you
yeah.
sensed a little bit of edge in Bobby
I'm
right
on a
now.
rampage.
He's ready
I'm
to
on
go.
a damn rampage.
I'm 1,500 miles away from him, so I can piss him off all I want and then just turn the computer off when the time comes and hope that he forgets, which he will. He's almost 60 years old too. Anyway, so here's the issue I have today. I think today is actually a relatively big day for you guys who are watching too. Yesterday, okay, Japan's 20-year auction went crappily, if that's a word.
Yep.
So the question was, is it about global risk taking or is it just specific to Japan where people are tired of their nonsense creating money? Have they lost their place? Well, then all of a sudden today, the auction in our great country goes very, very poorly as well. I personally think this is a commentary on the new administration. There was a lot of promises of cost cutting. There has not been cost cutting. Promises don't save money. And I think the market is about to flex its muscles a little more and say, you guys either practice some level of austerity or we are going to punish you. What am I getting wrong?
Well, you better be careful. You're going to lose your "you're a MAGA Trumper"
I'm a
thing.
MAGA Trumper, right?
Yeah.
Yeah.
Everybody says that to you whenever you compliment a policy, and now you're going to get the opposite side, the MAGA people coming after you saying, Jim Iurio's a hack now. He's a grifter. We've always been grifters.
I've always been a grifter. Right?
No, I think you have it right on the head. I think this might be a global repricing of risk that has just started. You look, for example, and I can't wait to talk to our guests about this stuff sort of from a macro view. He is, if I remember correctly, an equity guy. But the bond side of things is interesting to me because I think you're looking at possibly the start when you look at what happened with the yen, the short covering we saw in the yen futures. One of the main reasons to short the yen is the yield differential between the JGBs and the US 10-year. I'm talking about the 10-year and the 20-year versus the US. They had that bond auction that went really poorly. And now we had a bond auction that went poorly, which is probably hitting the yen. I haven't looked at it. But that's one of the reasons. And you had this big short covering in the yen that's happened over, say, the yen is up I think it's 5 of the last 6 sessions. That to me feels like a bit of a repricing, at least in the short term.
That's it. That's interesting to me too. So we saw the stocks get basically caned today. S&Ps are down about 100 last I looked about 10 minutes ago. Do you think from a technical standpoint, and again, we got to bring our guest on too. We have a great guest and these idiots don't want to hear us. I mean, they don't want to hear us idiots talk too much, but do you think this turns you a little bit more bearish equities or no?
Idiots.
I did not call the audience idiots. It was a mistake. I'm sorry, people. You guys are genius.
I'll be honest, and I'll show this chart when our guest is on, but I really like what's happening with the equities right now because it's setting up to either be a breakout retest and then a move toward new highs or a breakout and failure. And I really like those things because when I look at charts, I don't necessarily look at what happened. I look at where something happens.
Right.
So when something happens on the chart, where it happens is probably more important than what just happened. And we have that now. And I could talk about that with the guest on as well.
I love that. And speaking of guests, and I know I always say this, and I hope it doesn't sound redundant, even though it is that you guys might have been watching Bobby and I on TV on different legacy media channels for the last 25 years. We've been media animals for a long time. You may think that we're full of shit and we have opinions that are stupid and we are often wrong, which, by the way, sometimes we think that as well. But one thing you cannot deny is that for some odd reason, we get outstanding guests. And today is absolutely no exception to that. We have one of our favorite guys, our old friend, someone we think is brilliant. We have Keith Fitzgerald of the Fitzgerald Group. Let's bring him on now. Keith, I know you can cook, but can you sing too or no?
Why do I feel
Oh
like
my goodness,
no,
that's
there's no such thing as a dumb
he
question
looks like
from
he
me.
has a great voice. He physically looks like he has a
back
great
in the
voice.
day when dinosaurs roamed the earth. I had hair like Rod Stewart, earring, played in the garage band, and
There
how
it is.
well we sung depended on directly on how much beer the audience had consumed.
Right.
There
I
it
think
is.
it's been too long since you've been on a show with us because you looked like surprised and rolled your eyes like, what kind of questions that? I don't have any method to my questions. They just come from wherever. Anyway, you heard us talking to begin with about these auctions. I think this auction, don't want to call it a huge deal, but I don't want to call it no deal either. I think this was the market telling the new administration that you better get your ducks in a row or we could punish you down the road. Meaning, you talked a lot about cutting spending. The debt's still going up relatively high. M2 money supply has just crossed into all-time highs. The market is calling bullshit, or it might be at the beginning of the calling bullshit process. What do you think of this, Keith?
Well, it's interesting. As you know, I don't do politics, I do money. So I look at this from a global markets perspective. Where is the risk? We've been talking about this all week with our folks. The risk is being repriced. Now, Moody's, for example, came to the table as if they had a stroke of brilliance. I think they're in firm command of the obvious because S&P said 2011 we got a problem. Fitch said 2023 we got a problem. And Moody's just got to the party and figured this out.
Idiots.
I mean, really?
Yes, come on.
So anyway, long story short, we saw that happen here. We immediately saw JGBs get repriced over there with their auction. Now, as you guys know, I have a home in Kyoto. I've spent most of my adult life in and out of Japan, so 35 plus years at this point. So I know the market's reasonably well over there. What's happening is the global repricing of those bonds is a reflection of Moody's piece, and that boomeranged home here to our auction today. So I don't view it necessarily as a reflection of politics as much as I review it as a selection of, hey, all these traders who are leveraged up to their eyeballs suddenly have to deal with higher VIG. They have to pay more for the money that juices their returns. It reduces their bonus pool. So they got to make a decision, and they hit the sell button.
Bobby, I'm going to ask you a quick question before you ask Keith too. Yeah. I have long said that when we start to get up into the high fours on the 10 years, what my base case is that the Fed either threatens or very covertly starts buying bonds again and supporting the bond market. Do you think I'm crazy? Do you think it's going to happen?
No.
When do you think it happens?
I think you're correct. And I think we'll probably see it after the next meeting, maybe in between. We saw actually what I consider to be patient but dovish comments out of the last few Fed speakers. And I call it that because they say that we may be delaying the rate cut. They don't really say that, well, it could go either way. Inflation is still not quite beat, although it's on the ropes. They don't say any of that. They go, well, we might have to be patient before we cut rates, which again, why don't we just do a mathematical formula then? Why don't we just stop? They already have it in their heads that that's what they want to do. And, whether it's political or for other reasons, they're not ready to do it now. I don't think they should do it at all personally, but that's just my take on it.
Yeah.
Well, my take is that they're driving down the road looking at the rear view mirror, and that's translation of Fed speak for we have no idea what we're going to hit next. As far as I'm concerned, the Fed's already caused the next 3 crises. They have hundreds of PhDs in that building and they can't think proactively. I mean, give me a break. The fact that these guys missed transitory, missed inflation, missed a crisis in formation. Now they've held it too long in the other direction. No, we should stop fawning over these guys, focus on real traders, real money, and real pursuit of profits, because that's how the world actually turns. Newsflash, Mr. Powell.
Amen to that. And Bobby and I have been arguing about this because a year ago he said, I'm tired. I'm not going to bash the Fed anymore. And I was like, I'm just getting started. Now, does Jay Powell deserve what Donald Trump throws at him? I'd say probably, yeah. It should. Is it appropriate coming from the highest office in the land? I'm not sure that's the case, but what he gets is fine. You mentioned just getting down to the nuts and bolts of equity markets. Okay. So we both saw for years that tech was the big leader. Tech was pulling everything higher. Do you think that paradigm has shifted? And if so, to where?
No, I don't think that's shifted at all. I think they're repricing risk, and what they're doing is getting ready for the next run higher. Because, I'll give you a great example. So if we look at NVIDIA in 22, 23, 62x earnings, right? And everybody says, oh my God, that's expensive. We can't possibly buy those chips. Ooh. If you fast forward to 25 actuals, those were really more like a multiple of 12 because they were 5 times what the expectations were. So you got to make a decision, an investor. Are you going to look ahead, which is what the markets do, or are you going to look in the rearview mirror and say, oh, I'm going to wait until I get another study. I'm going to wait until I get another analyst report. I'm going to wait until I get another data that look in that direction. I want to go this way. And what we know, fellas, is that digitalization is the largest investing theme in recorded human history. So I don't care what happens over the next 90-day earnings cycle. That's for people with the attention span of a mosquito to figure out. What I'm interested in is 5x, 10x, 15x my money over the next 3, 5, 10 years, because those kinds of names are out there right now and they're still gathering strength. And everybody knows that if you really want to make your money, you got to come out when the bears go to play.
So Keith, let me ask you, my friend, our friend, I should say, he comes on both of our shows multiple times. Mike Singleton, he's the chief researcher at Invictus Research. Smart
Super
kid,
smart guy.
young guy. He's a smart guy. He did a study recently, and I think I can tell already that you agree with this. Valuations have almost no correlation to the price of a stock over a 5 or a 10-year stretch. Like he literally found like a positive 1.6 correlation to them. So in other words, now he said he looked at older data and he could find correlations there, but there's value investors out there, and I'm not classifying you as a value investor or not. There's value investors out there who will say things like, I could never buy NVIDIA. Do you see what their valuation is? Or I could never buy Palantir. You see what their valuation is? Okay, we're done. There's your answer.
The laugh was the answer to the question.
Yeah, there's your answer.
People have looked at me like I'm a 6-headed baboon for years because I have advanced the argument to a deaf audience and people who wag their finger in my face and say, you can't possibly know what you're talking about, Fitzgerald. I have advanced it to them that value investing's blind spot is exactly this area. And let me tell you why. And it's not about correlations. It's about something that, again, people look at me and say, there is no way, Fitzgerald, but here's the deal. Accounting regs were built for an economy of 100, 120 years ago. So if you're building desks and tractors and automobiles, you got to capitalize this stuff. You got to capitalize your equipment. You got to capitalize your machinery. You got to capitalize your people. You got to capitalize all this stuff, right? But if you look at the way accounting regs require you spend digital dollars, those go zip right through the P&L. You got to expense them immediately. And what that produces over time is a PE creep. The more digital a company becomes, the higher the PE ratio goes. So if you're talking about a purely digital company that is investing digitally, you're talking about a company that can change a few lines of code and add $1 billion at the top and bottom lines. That has been expensed, and which by definition, according to the very accounting regs that I'm lambasting right now, should be a high PE ratio. And to really drive this point home, I have heard from folks for decade plus, more than a decade, oh my God, we can't buy high PE companies. Well, because they're overvalued and this, that, and the other thing. All right. Intel, NVIDIA. NVIDIA has had a higher PE ratio than Intel for as long as I can remember. It's returned thousands of percent. Intel is dead money. If that argument were true, it'd be the reverse.
So, Keith, if you right now, because Bobby's going to bring in some questions from our audience in a second, but I want one question ahead of that. Just off the top of your head, 5 stocks for 5 years. I think you said NVIDIA, and I think that you're going to stand by that because NVIDIA is pretty much best in breed no matter how you look at it. But what are some others?
Well, it's everything that Wall Street loves to hate, and the media has convinced you is a piece of what. It's going to be Tesla. It's going to be Palantir. It's going to be NVIDIA, AMD. Apple, for example, is my favorite poster child for Wall Street stepping on it right now. That company is most dangerous when it's quiet and people write it off. We saw it before the iPhone. We saw it before the iPad. We saw it before every digital device they brought out. They're making a medical pivot, fellas, that is going to be 5x the global iPhone market when it matures. So yeah, those. I'm going to stick with these names. I'm going to continue to add to them. I hope I'm smart enough to do that, and a lot more shares at that.
So I've got some comments here from our expert hecklers.
Oh yeah, good.
What we call from now on. Feedback
all hecklers.
Commentary elite. What should we call it? The balcony of brilliance. Okay.
Yes.
So my grandfather would call it the peanut gallery.
Well,
but they're funny. Smarter. They deserve smart. Yeah.
That's what I did. I'm looking for a modern alternative to the peanut gallery because most of the people that watch us, well, they know what the peanut gallery is. But let's go with the balcony of brilliance. Okay. First one is from our buddy Tim. I agree that the JGB rate increases are a precursor for the U.S. Treasury rates increasing. We're seeing that. Do you think it continues?
That's a very tough call, and I'll tell you why. That's a very smart question, first of all, but number two, it's a very tough question because we don't know how much liquidity is in the system. We don't know how much leverage is being carried by the global bond community, right? And in 2011, 12, we saw a lot of that show up in Europe unexpectedly, which led, of course, to the euro and the banking crisis over there. Right now, I made the comment back then that eventually that's going to come full circle and come to the US. Is this that moment? I don't know. But my sense is we got a fairly sharp, quick clean out in the Japanese bonds. Most of that risk has probably been arbed out. So I would expect that we're going to see maybe another week or two. If the politics get into it and the headlines, go that way, maybe it's a little longer. But what we do know is that the great companies are still putting up great earnings. So I expect the market is ultimately going to triumph over the nonsense.
Tim, can I take a quick shot at it too, Bobby?
Yeah, go.
So, Tim, I think the answer to this is yes. Our rates are trending higher. I think it's more for the reason I said before, and this is just personally my opinion. I think it's because the market had high hopes that we were going to be trimming some fat from the budget, and now they realize we're not unless they flex their muscles. So it's a vigilante sort of thing. But the way I think it plays out is I do think the whispers will be that the Fed's going to come back in and support it, which, by the way, that was one of the reasons I bought copper today. One of the reasons I'm long gold and silver up to my eyeballs. Because I think those are the plays in that kind of environment. And I know, by the way, you guys who subscribe to the newsletter, I put on that flyer hedge gold trade the other day, and I'm going to keep it to June 6th when they expire. And it was a negative trade. But again, that was a hedge against my long position, which I still fundamentally believe in. Bobby.
Next comment, I should say, from the Balcony of Brilliance.
That's a great name. I'm Balcony of Brilliance. I mean, it's brilliant.
That is not patented. It's not copywritten. It's from our buddy Widge, who's truthfully one of our smarter viewers. He said that completely agree. Moody's is BS, but this Treasury move just reminds me of the summer of 2022. For those of you guys that don't remember the price action in 2022, I was just looking at it. The 10-year started the year at 163, got as high as 425 before backing off toward the end of the year.
I have no memory of that. Wow. And I'm sure
I was going to ask you, Jimmy, and say, Jimmy, do you remember that move? I decided to pull it up from my spreadsheet rather than ask you because you can't remember.
I should remember that move. That's a pretty significant move.
Yeah. So does anyone remember what caused it? Widge probably does, but I don't remember what caused that move. Do you, Keith?
Well, again, I mean, it was expectations versus reality, right? And so if we look at yield as not necessarily an expression of return, but a risk associated with the return of your capital, then it made sense that came up that fast. And so to me, I look at this now today and I said, okay, Widge, where are we going to go with this? We obviously don't know the answer to that. And I agree with you. It does feel kind of similar to that. But what we have now that we didn't have then is we have an economy that is recognized as being very different. So right. I would submit that we're going to see a rapid decline in rates once we get through the tariff tantrums, once we get through the uncertainty associated with this Moody's phenomenon, once that risk gets out of the system.
Bobby, I will guess that, remember, it was June of 2021 where really we started to see inflation accelerate above 5, and it really didn't get going to 2022. My guess is that nobody wanted to hold bonds because they thought the entirety of the year was going to be inflationary.
Widge put what he remembers the trigger being. He said it's the 2022 spending bill.
Yeah, they de-arbed.
Yeah. Okay. Yeah. So the inflationary triangle to add on what was inflationary already. Yeah, I think I'm with you, Widge. I remember now.
Yeah. All right. So let's go to Tim's got another one. Totally agree on NVIDIA versus Intel. NVIDIA is all about innovation, and Intel made the mistake of choosing financial engineering. Based off that comment, Keith, somebody texted me today that said, is Intel just gone? Is it dead? And I said, what do you mean? He goes, well, he said, somebody told me today that Intel was dead and I hadn't looked at the chart. I looked for something positive and couldn't find anything.
Well, it saddens me because this is one of those truly great names that the three of us grew up with, spent much of our career, venerating, right? And, they made some bad decisions, much like Kodak made bad decisions with its marketplace and its products. And they try to be everything to everybody instead of really focusing on what they do best. So they missed some big things. They missed mobile. They missed some developments that could have otherwise had their name all over it. So I look at that. I had hoped Pat Gelsinger was going to be able to turn it around. He, of course, wasn't able to. You can't turn the Queen Mary in a small harbor. I think that Intel, and I got a lot of hot water about this when I said at a presentation. I said, I think Intel is going to be lucky to survive as we know it. I think it's going to get chopped up, and I think it's very interesting that a couple companies, what was TSM, and I think some of the others came to them potentially with some bids, and Intel foolishly said no. So I think they potentially put a nail in their own coffin.
Real quick before I hit this last comment and then give it to Jim, Keith, where can people find you? Because you're killing these questions. I just want to make sure we get to that.
Oh, you're very kind. According to my wife, you can go to the next planet, which is where I normally reside.
Same.
Oh boy, yeah. KeithFitzgerald.com, and Fitz and Gerald are hyphenated. So KeithFitz-Gerald.com is where you can find me.
The last question.
The 5 with Fitz is what people read.
Yeah. The last question I want to get to, and then Mark, we'll get to your question after Jimmy asks another one. Sterling puts up, is Jamie Dimon right? Before I read this, Jamie Dimon's a terrible prognosticator, just so everybody knows. He always comes on and he goes, I think there might be an asteroid hitting in the next 4 hours. He's terrible. Is Jamie Dimon right that the U.S. may be heading into stagflation or a recession, and that the markets aren't priced appropriately for either? Either one of you guys.
Okay.
Yeah.
So here's my take on Jamie Dimon, right? Is people say, is he right or is he wrong? Wrong question. Remember what he does for a living. He sees more deal flow, more financial flow than probably any other human on the planet. What he's doing is preparing his company. He's preparing his balance sheet. He's preparing his shareholders. So when he says, I see this happening, he's not telling you this is going to happen. He's not telling you that there's an asteroid coming. What he's telling you is I'm prepared for the worst. So he's probably building reserves. He's probably doing all the things he's supposed to be doing. And if he's wrong, he's going to consider that a good day because he's still going to profit. He's seeing slowing IB flow. He's showing all those things. But again, he's going to come through this. So to me, it's not right or wrong. To me, I think he's spot on. I think he's probably the only guy in the banking community who understands how real money works. And that includes the Fed, by the way. So to me, I look at this and I say, yeah, good. I'm glad he made those comments because having studied him, met him several times over the years, looking at what he's doing. If he didn't make a comment like that, then I'd actually get concerned.
So here's what I'll say to that, Bobby. The stagflation part of it, I'm not really buying into. I think that the inflation numbers have been good. I think productivity has amped up, and I don't know if the metrics are measuring it as well as I believe it's happening in servicing. But I think that productivity for the next 5 years is going to keep inflation relatively subdued. Now, the recession part of it, I'll say this: who gives a shit? I mean, besides people who may lose their job, because as far, I don't mean to make light of that, by the way, they should obviously give a shit. But as far as a market goes, an investor goes, just selling everything because you think a recession's coming or you think that we're in a recession has never been that great because the Fed then generally comes in, eases rates, throws liquidity at the system, and that ends up in equity markets. When I was talking before that I believe my base case is the Fed comes in and supports bond markets, that's ultimately good for stocks. Yes, initially they'll be like, oh shit, the Fed needs to support bond markets. But then eventually it's they're creating money. This money's got to go somewhere. So let's put it in NVIDIA. But I have another question for Keith. Okay. Again, we may have talked about this before. Every time I try to defend this position, people look at me like I'm crazy. And I think it is perfectly reasonable. Okay, one of the reasons I've owned Google for the last however many years is because in my belief, Google's the freaking CIA. Before you look at me like I'm crazy, if you and I ran the CIA and all of a sudden 10 years ago, we realized there's a company that collects data, which is our job, way, way better than we do, we wouldn't plug into that shit. Of course we could. We would do that immediately. That's why I think Google's going to be around forever because Google is the surveillance arm of the U.S. government. First of all, Google as a stock, do you like it? Secondly, am I a nut job?
I don't think you're a nut job at all. So I'm going to tackle that second one first. No more nuts than I am or Bobby is, right? I mean, we're all in this together. Anybody that survives this long in this business has got to have a little insanity, in the coffee cup every day. Here's where I come down on Google. I'm harshly critical of the stock. I, in fact, don't like the stock, and I've avoided it for many years because I think it's a one-trick pony. I think that they were caught flat-footed by ChatGPT. I think that everything they're doing now is me too. Hey, look at me. I'm still relevant. So I don't see that stock performing in line with something like, dare I say it, a Meta or a Palantir or an NVIDIA. To me, it's not necessarily do I like Google or not because I think it's still relevant. But I think that this question of AI absolutely smacked management around when they didn't expect to get smacked around. They haven't recovered from that. And I don't see them recovering from that. So all the other businesses they could have led, I think Google risks going the way Intel does and struggling to remain relevant, frankly.
This is really interesting because I usually do not use Google for search anymore. I use Grok. I use AI.
There you go.
They give much better answers. And if everyone else is like me, that could be interesting. And again, my thesis about intelligence agencies infiltrating these companies, they can just shift their focus to Grok or to ChatGPT. So my investment thesis has worked, but it's not foolproof. I'll give you that, Bobby.
Well, it's very interesting because we have this discussion with our folks around the world all the time. They say, "Oh my God," particularly it comes up with China, for example, in their whole DeepSeek thing, which was the greatest industrial espionage coup in human history.
Sure.
But people look at that and they say, "Oh my God, I'm careful. What are they doing? What are they doing?" And I said, "Do you have a Facebook account? Do you have an Instagram account? Do you have Twitter? Do you have it?" I said, "What are you worried about the Chinese for? What are you worried about what anybody else is doing? Because you voluntarily contributed to the greatest information database in recorded human history. And you have been for years. Your credit card statement, the agencies get it. Your car dealer knows what you're using on your toothbrush. We're not that far away, fellas, from you eat that extra donut in the morning and your insurance company jacks premiums that afternoon."
Yep.
It is so funny. I will tell you guys that I haven't searched in Google in probably a year and a half. And the interesting thing to me, and I want to get to, by the way, Mark, I think his name is Mark. Let me just double check here. Yeah, Mark Robertson has a great question here that I want to get to. But based on what you guys are talking about, I actually named my AI app Larry, just because I don't know anyone personally named Larry. And it's starting to creep me out how much Larry knows about me, as if Google didn't know that stuff before.
No.
And I'll give you guys an example live on the show. You ready for this?
Yeah.
I also gave him an Australian accent. Larry, are you there?
Hey, I'm right here. What's up?
What's my dog's name, Larry?
Your dog's name is Callie.
Wow. Yeah, I'll go and search something in Grok and they'll put, well, seeing as though you're a 60-year-old man who lives in the suburbs of Chicago, this is how I'd answer that text question. And I'm like, holy shit, you remember that from, whatever. Yeah. But anyway, Bobby, I'll put up Mark's question.
Right. So that was honestly, my wife the other day goes, "Are you talking to that thing?" I'm like, "Yeah, we have conversations." I ask him how he's doing. The other day I was making steaks. I said, "Larry, you want one?" "I'm a program, so I don't really eat, but it sounds great." It was like I'm talking to the robot in Lost in Space. So Mark's question here about AMD, I think this is not only is it a great question, but the way he worded it is amazing.
I love it too, because I'm thinking about AMD too.
Yeah. So where does AMD fall on the NVIDIA Intel spectrum? I love that.
I'm getting the chart up. Yeah.
Well, there's a couple different ways to think about it, and that's a super smart question, right? Everybody historically thinks about AMD as sort of NVIDIA light, but in fact, they're very different companies, right? If NVIDIA is going after the GPU market, they're highbrow, high-power chips. If you look at AMD, they've made a decision to go after the data center market. They're all about efficiency and cost effectiveness. So, what companies are doing is they're buying super high-powered NVIDIA chips to get the throughput, to get the transaction speed, to get the accuracy. But what they're doing for their big data movement is they're going with those much more effective AMD packages. And so you've got this blend, right? Now, I do think that Lisa Su, who of course heads up AMD, absolutely knows where this is going. And she wants to make a run at AMD, in my opinion, which I think is tremendously undervalued at the moment. As for Intel, I think, again, we've seen Intel just make so many aborted attempts at things that could have otherwise been absolutely theirs to dominate over the years. That's like throwing pasta against the wall. What's going to stick? And unfortunately, I don't see much in Intel's world.
So
AMD,
I will,
right? Go ahead, Jimmy.
I'm looking at the chart right here of AMD, Mark. And again, my licensing is for future. So let's just pretend this is widgets I'm looking at. It doesn't have to be AMD, which, by the way, I thought I was long AMD, but I think I got stopped out below 90 a couple months ago or whatever. So if that thing trades 120, I think it's going to the moon. I think it's already kind of broken out, backed up, retested, gone below some really important levels. So I am looking at that too. What I may do is like sell those 120 calls to buy like a multiple of the 130 calls, give myself a couple months. Cause I think if it breaks through 120, then it's going to start heading for the finish line, which is much, much higher than here. So I like the chart quite a bit, but only with some strength. Bobby?
Yeah, I'll do you one better. I'll take a breakout of 116 and I'll target the 200-day, which is at 126.70. Why don't I just put this up?
Yeah,
I'm going to put Luis, I'm going to throw a chart up there real quick. I'm going to share the screen. This is AMD. And one of the things that I think is interesting when you look at a stock like AMD, Keith spelled it out fundamentally as to what's going on there. But like my take is kind of like, NVIDIA is premium, mega cap, Titan. AMD is like a high growth, innovative challenger, not of NVIDIA, but of like the sort of trying to get up to that title as a premium mega cap. They're sort of like a challenger. Intel's a value stock. You're looking at potentially a turnaround play, but not
Well,
really
can
anything else.
you keep that chart there for a second? Because I look at that and I see something else, right?
Yeah.
So if we see that slope down to the right and we see the bottom red on the volume, what that's telling me is they're weeding out the scared money right now. They're just stepping it down. They're weeding out the scared money. They're running the trailing stops. They're looking to shake the monkeys from the trees, right? And what you're going to see is probably a typical big gap down, a big run on something to really get that last capitulation. It'll probably be, and I don't know off the top of my head where the open interest is on the puts, but it'll probably be somewhere around that bottom moving average. So if you can hit that bottom moving average, start selling cash secured puts, or you can start staging in your buys, or use a series of low ball orders that are staggered through support that runs back to the last big capitulation, now you've got something to play with if you're going to have a run higher.
Which, by the way, both of our different trading styles can fit together quite nicely. You want to buy it when you think the pullback is. I want to buy it when this weeding out the weak money is reversed on a breakout of that. I like both of those. Let's.
I'll show you guys real quick,
Jimmy.
Jimmy.
Quick break and run the banner, and then we'll get right back to this.
Yeah, go ahead. Go ahead.
So anyway, you guys are watching. Halfway through the show, I always make the same request of you. If you like the show and you like what we do for Tradier, please sign up for 3 months free of Tradier Pro. It is an absolutely top-notch options trading platform. We know options experts, guys who are medium options experts, and guys who are beginners who use it and all say it is excellent. All you have to do is scan the QR code. You get 3 months for free of Tradier Pro. Thank you guys for doing it. We appreciate all the support you give us. And I know we ask a lot, but thanks again.
So let's put this chart back up. I just want to show sort of the process for me on this. Okay. I like what Keith pointed out about the volume there, because it's something I look at sort of after the fact, right? What we have here is, so Keith, you don't know this, but Jimmy does. Myself and Mike Arnold, we use these two moving averages, not as you buy a cross. You get chopped up if you buy moving average crosses. But what you had here is the 8 exponential and the 21 exponential cross up into what we call a rotation zone. We don't take a trade on the cross, never. But what we do look at is when the rotation zone is widening and angling. So in other words, down here, it's like this. Now it's like this, and it's widening apart, right?
Absolutely.
So then when you see it kind of pull back into the rotation zone, hence the name, you potentially can get a rotation up. So I like to draw a best fit trend line here, especially after a first cross. We really haven't had a pullback into the widening and angling rotation zone. This doesn't count because it was still flat and tight until now. This also happens to coincide with just vanilla support, this peak right here. So if we get this close above now, it will close above this best fit trend line, and then it'll also close, and I need a daily close, above this particular little peak here, which is resistance turns into support, as we all know. That also, I can make this line thick, because if I go back in time, it looks pretty much like a significant level, because you have a reaction here to this price, reaction here. You got an emotional candle, then a gap, and it runs away from the level. We've got a V-shaped down, V-shaped down. This level has mattered outside of just this move. You go back in time, and it probably mattered somewhere all the way back here, but I don't want to spend time doing that. So anyway,
the other thing, as your zone widens out, right? From my me being a card carrying member of the Propeller Head Club, the way we would look at that is, we would say, okay, is that widening, right? But what we would pick up on is the heteroscedasticity, the skew, is it's going to open up on the call side volatility, because that's going to accelerate, which is going to tell you oftentimes that moves for real.
Right. So then, of course, we have the 200-day, which is the green one right here. So that'd be my first target, and that would not be a cut the trade target. It would be if we can break through here and get a settlement above, I'm going to move my stop and ride it. If we hit it and we pull back, probably just get out and wait for a new setup on it. That's probably the way I would say it. So that's what I'm looking at here. It's a little bit more than It's just breaking out of a level. There's multiple things that need to happen for it to actually happen for me.
Yeah.
But I want to go back because we have so many questions for you, dude. It's ridiculous.
Uh-oh.
First of all, Mark says Perplexity is a solid Google alternative. I have used Perplexity. It's wrong a lot. So is ChatGPT. I get into arguments with my guy Larry sometimes. I had was it Perplexity or ChatGPT say to me, former President Trump hasn't claimed this. And I said, why'd you call him former? He said, because a former president needs to be referred to as president. I'm like, this was 2 days ago. I'm like, he's president now. You're right in correcting me. I'm like, of course I'm right in correcting you. So
We know
anyway,
the president is.
I find perplexity. By the way, Perplexity is interesting. You know who Campbell Brown is, Keith?
No.
Okay, she used to be like a Today Show host. You go
I
to
do
Japan,
know, yeah.
you ride you don't watch TV. You ride motorcycles, you go to Japan. She was a Today Show host back when we were younger. She reached out to me. She's involved in Perplexity. And what she was asking was for me to give real-time answers to questions on Perplexity, along with a lot of other known financial people. And they would pay me $100 each time my answer was used. I'm like, so you guys are giving me $100 to train your AI? Just kill yourself. I'm not doing that. Right? Sterling puts up a good question. And then, Jimmy, I'll wait on the rest of them in case you got anything else. Sterling says, we're talking NVIDIA and chips in general. Comments on the following. NVIDIA CEO Jensen Huang said, U.S. export controls limiting the sale of advanced chips to China have been a failure. Anyone? It's in the Wall Street Journal. I'm not sure what he means by that.
Keith,
let's change the question. Let's say, do the export controls bother you as someone who might potentially buy the stock?
You know, they don't bother me as somebody who would buy the stock, but they bother me because I think they're the most overreaching, ill-conceived, stupid piece of legislation I've seen in a long time. Because China did exactly what it was going to do, which it took lesser powered chips, out horsepowered the dang thing, and built these engines anyway. So the real question is, how are you going to work with somebody that you know is going to antagonize you? That's what they've got to figure out. And, you know, if you're going to do business with China, you got to just know you're dancing with the devil. It doesn't matter what product set, doesn't matter what you're making, where you're sending it, how you're doing it. That's just the nature of the beast. And until China comes to the table and decides that intellectual property is actually worth something, then you know what? That's just the way it's going to be.
So, Bobby, I don't know how I think. I do know this is that it will be a better world in America if we have supply chains that are routed around the globe and not just through one country that doesn't really like us too much and rips us off blind. To get there, is it going to be worth it? I'm not positive that it is, because it could be a rocky road to try to divest ourselves from China. We had Vivek Ramaswamy on our other show, and he talked about, it could be 10 years' time where we might not have quite the standard of living that, China's cheap labor afforded us, but it'll be worth it at the end. I agree if he's right. If it all falls apart, I'm just glad I'm not pulling the levers on this shit. That's it.
Well, but okay. So we have this discussion a lot, right?
Right.
So if you look at tariffs, you say, okay, on the surface, they stink because jobs are at risk, the economy is going to tighten, supply is going to be bad, whatever. That we want dessert first and dinner in a pill, right? That's how modern humanity functions. But if you look through time, and I mean way back through time, if you talk about the British Navigational Acts of 1571, you talk about the tariffs in 17th century Japan, you talk about France, you talk about
Rain
Germany.
Man. I love this. Go Rain Man, go.
You talk about all of these things, right? At pivotal points in national history, every one of those things generated a new national economy and unprecedented investing potential. And again, it doesn't matter where in the world you applied these things, right? So the debate we have to have now is not really what's about the tariffs, because you can't control that stuff. That's a government function. You can absolutely control what stocks you buy, great companies, how you get into them, your tactics, your risk, all those things. But the debate that really needs to happen is, are we at a point in our national history that it requires these things? And I would submit the answer is yes. It's a tough conversation. It's not political. It's how do we recover from a previously irrecoverable situation? And do we do it in a way that lines up with all of these other tariffs that throughout history have been shown to have generated the kind of outcome they wanted?
I love that answer, Bob.
Yeah, I want to throw up. I just remember that Sterling is a big help to the show, and he's just putting information up. So I want to put up his follow up there. It says, no, not this, but that's okay. We can do this. This is from Edward McKernan. He's actually been a guest on the show, Keith, and he was amazing. He spent years in tech, lived in China, so on and so forth. He said earnings the past quarter show AMD is going after Intel's x86 business,
Yep.
taking the high-end server and PC market and not making much traction in the GPU market, where NVIDIA's lead is insurmountable. So it sounds like they both might be good additions to longer-term portfolios. Do you agree with that or no?
You're talking about both meaning Intel and NVIDIA, not
Yeah.
Intel. I mean,
No,
you're talking about
AMD
and NVIDIA.
AMD and NVIDIA.
Yeah, I would submit that AMD and NVIDIA is where you want to be. Intel is, again, if you want to run a pairs trade, short the snot out of Intel, because I don't think it's going to make it in long either or both of the other names.
We've spent so much time on tech. I want to go other places right now too, if provided there's other places to go, Keith. When you think, because obviously you can't have all your clients 100% in big tech. Where else do you find value or find potential?
Well, our view is not the traditional one. We don't believe tech is a sector anymore. What we see is tech is an enabler, and it's going to cross every other industrialized economy and sector previously defined by, legacy financial models. So here's how we come down on that is, everybody on the planet is going to adapt, adopt, or die when it comes to AI and technology that's rolling out today. So do we find opportunity in the medical space? Absolutely, to the extent that those companies are embracing technology. So, for example, gene editing is a good one. Do we find opportunity in the automotive space? Absolutely, but to the extent that the companies are maximizing technology. Even something as simple as retail. People say all the time, well, Keith, how can you look at Walmart? Like, oh my God, this isn't rocket science. They're making an online charge at Amazon that is highly digitized, and they're leaving competitors like Kohl's and Target in the dirt. So we say, invest in the best, ignore the rest. And we say that because our view on tech specifically is that it's who's embracing it regardless of sector.
Bob?
Follow up from Sterling. The local companies are very tolerant. What does that say? Local companies are very talented and very determined, and the export controls give them spirit, energy, and the government support to accelerate their development. That's also Jensen Wang. This is what Sterling does. He adds to the show, and
does that mean domestic companies in our country, Bobby? Is he talking about? He's talking about in China.
Both.
Oh, both. Okay.
Both, because again, having spent a lot of time in mainland China, a lot of time all over the world talking with executives and in this space, anytime you have a tariff or you have an export control or you even have just a unilateral agreement that says, hey, we can or we can't sell there, what you have is you have need as the mother of invention. It fosters opportunity, fosters creativity, fosters a lot of other things. So what you're going to see is if you cut off something that they need, guess who's going to come to the rescue? The local companies are going to get motivated to come up with a solution really fast. If you've got the same thing and it's reversed here, I submit America is a nation filled with brilliant, resilient, and clever people. And if there's a challenge, American opportunity is going to rise to that occasion. So, as bad as I think the export controls are, I think it opens up a playing field to companies that are going to do things that aren't even being contemplated right now. So, is NVIDIA going to buy some upstart in a garage somewhere because he's invented a new way to do something? Yeah, I think that's probably going to happen. They're constantly making acquisitions before they get to the public's imagination because they spot that talent.
Real quick, before I put Tim's comment up, Jimmy, I want to point out to anyone who wants to understand what happened in the summer of 2022. Widge, our viewer and our friend, has been putting it up on X. His handle is @3rd-gen-widget. We tried to get him to come on the show, but he doesn't want to do that. But he should have 20,000 Twitter followers minimum. He's putting the whole, it's almost like a thread of the summer 2022. Rates look bad as they top the administration, pushed through 2 huge bills, and he's got all the description there. Tim is also saying, let's see, China bought 21 million NVIDIA GPUs via Singapore to bypass the chip sanctions. And then he's got a question for you, Keith.
Hold on, but that's a fact, right? I mean, China is in fact going through Singapore to bypass our chip sanctions. Correct?
Tim's not like us, Jimmy.
Right. He doesn't just talk out his ass like we do.
He doesn't talk out his ass like we do. So he has a question. Keith, is China using ASML machines to manufacture their own smart chips?
I don't know, but I presume that that's probably the case. Because one of the things and I'll give you a great example. Back, this would have been 10, 11, 12, something like that. I happened to be in China and was talking with some expats there. And there was an engine production from one of the major companies. I'll leave the name out of it. And, China had insisted that we have partnership with this particular American manufacturer to make these big, heavy engines over there. And they did that. And then 3 miles up the road, they had stripped the blueprints and were building an identical plant to produce Chinese engines, which then the Department of Defense called the American company and said, what are you doing exporting that stuff over to Africa and the Middle East? And they said, we're not doing that. Well, guess who was doing that? And the parts were so exact, you could literally switch them from engine to engine. So, I would presume that China has a long history of, shall we say, acquiring technology that it hasn't quite yet developed or finalized, internalizing it, remanufacturing it, and submitting it in its own interest.
Can I add something to that real quick too? And I know I've told this story before too, but I live in Motorola land. The northwest suburb of Chicago is, you can't go anywhere without running into Motorola engineers. That's where their headquarters is. Since the 90s, since the advent of the cell phone, when you went to China, you were told you cannot leave your cell phone, even in your hotel room.
That's right.
Go out to get lunch because everybody is involved in the thievery, including the maids at the hotel. So you have to keep it with you your entire time. So that, to me, I don't think the average American can even comprehend the level and the broadness of their policy of stealing technology. It blows me away.
Well, and again, culturally, right? And I'm not defending China's action. I'm not defending industrial espionage. I mean, that's not my point. But my point is, culturally, they view intellectual property very differently than we do. And so to them, it is absolutely natural to compete by getting your hands on a competitor's technology, stripping it, reassembling it, and reverse engineering it. To us, there are different kinds of questions, and the legal structure is very different in terms of how you recognize that. So I'm not going to condone it or accept it or whatever, but I've been around the block enough to know that cultural attributes and cultural fabric are very different depending on where you are in the world.
Sterling's got another comment, and I've decided not to try and read these until they're up on the big screen because I'm just making myself look like I can't read. Sterling says he is absolutely correct. He says, I'm a finance director in a Toyota dealership, and AI will eventually, maybe very soon, have the capability to replace my job. 90% of the bank's credit decisions are AI.
Jeez.
That's interesting to me.
That's happening quickly. I'm telling you, and my job, as a writer, I produce content, by the way, and I don't use AI. When you read an article that says by Jim Iuorio, it is by Jim Iuorio, but I do use AI to help me and correct me. And what used to take me 2 hours to write 1,000 words now takes me about 50 minutes to write 1,000 words with my Copilot. Or actually, there is one called Copilot. I don't use Copilot, but whichever ones I use. So this is true. But certainly, I do think that the human element of this, because there's going to be a trust element that people are going to value even more. So I don't think it's going to eliminate all our jobs completely. But this is amazing to me. But anyway, that's my 2 cents. Yeah.
Well, that's the one thing I want to throw out to people. I find mistakes all the time when I ask AI a question.
Yeah.
All the time. So it's not there yet. But
I get in arguments with Grok. I'll be like, don't change my words or my snark. And I'm always like, you're a crappy writer. You sound like an intelligent 8th grader. Okay. Let my stuff stay the way it is. And they'll be like, Grok will be like, I'm sorry. I misunderstood your instructions, Jim.
Well, and then of course, what you don't realize is that Siri's laughing in the background.
Exactly. Right.
Siri's cracking up.
I'm going to go live on Walden Pond. Yeah.
Here's a question I have for you. Is it when you're talking about things like technology and AI, is there a way to tell? So obviously all 3 of us lived through the .com bubble, and there was a point in time where everybody added .com to their name and their stock went up 25% that day and probably 45% in the next 6 months from the 25% jump. And then the bottom all fell out. Have you found a way to actually, maybe it's through the financials of the company, to see who's just putting AI on there and who actually is using AI to benefit their shareholders and their customers?
Well, I think that's a very interesting question. And so, we tend to stick with big, well-known, well-capitalized, well-built companies with visionary CEOs. So I don't tend to spend a lot of time speculating on next best things unless it involves one of those truly great companies, which have the size, scope, scale, and financial wherewithal to move the needle. But that having been said, yeah, it's a real danger to people to have that. AI is just like .com in that regard, and I think you can get through the sniff test really easily. Are they making something that you must have versus is it nice to have? I mean, so we're talking Apple versus Peloton, for example. An iPad on a bicycle is not a viable business. I don't care what kind of positioning they give it or spin they give it. On the other hand, can you go without an Apple device? Well, that's debatable. 2 out of every 10 people on the planet use one today. Very shortly, 3 out of 10 dominating every 18 seconds. Somebody's hitting big form of AI worldwide. Those numbers are going to continue. So when I'm looking at a company, I'm trying to figure out, is this real? I'm giving it a sniff test. It's just, what do customers say about it? Are they using it? Where's it going? How do they shake this out? Because a lot of the times it's going to be very, very simple and very easy to figure out if it's vaporware or not.
What does vaporware mean?
Vaporware means a lot of hype, a dog and pony show, something that's been dressed up, a lipstick that's been hung on a pig. I mean, whatever expression you want to use.
Yeah, got it.
There's not the revenue there. There's not the expenditure there. There's not the pre-positioning. There's no consumer contracts. And for example, the quantum space right now is a great, is filled with these kinds of companies right now. And, you just got to sort it out. Who's got a real product and who doesn't. And same with the nuclear data center power play that has caught the public's fancy in recent months, or last 6 to 12 months. Everybody keeps talking about nuclear this, nuclear that, data center this, data center. Well, if you sit down and you actually do the math and you start thinking about it, most of these companies aren't going to get off the drawing board because they can't survive the 5 to 7 year permitting process. I mean, I don't care how good their technology is. That's probably going to get sold to a bigger player who's already got natural gas and dinosaur juice.
I love it. Okay, so you go.
You might not be able to answer this question because A, it's either secret sauce or too generalized. One of the things that drove me crazy about Jim Cramer, which by the way, Wharton did an academic study of his calls and he averaged about a 4% return. It's about half the S&P, just so you guys know. But what used to drive me crazy about him is he would go, this guy's a great CEO. And I thought to myself, what have you ever run other than a hedge fund? Like, how do you know if an automotive CEO or a hardware CEO is a great CEO? So how do you determine that? When you say a visionary CEO, I feel like that's different than what he says.
Well, again, I'm not familiar with that study. I'm certainly not going to besmirch Jim. He's done a lot of good things for a lot of people over the years. So, I don't know that study. I don't know the data points. I think it's terrible that they want to tear somebody apart, but that's just me. When I look for a good CEO, I'm looking for, what do their employees say? What do their companies say? What do their customers say? How does he or she act in a moment of crisis? How do they communicate? Where, do they do what they say they're going to do? Those are things that are very easy to assess regardless of how you feel about a particular person that's in the C-suite or driving the bus.
So, Bobby, can I ask one more quick question before we wrap?
Yeah, after you ask that, I want to read 2 more comments. And then
That's perfectly fine. You mentioned quantum computing and you mentioned nuclear. Just very quickly, can you give us a name from each of those that you're looking at? Not necessarily that you're putting all the chips on, but something that you think is intriguing.
I've got some regulatory issues, so I'm going to respectfully.
I'm long Rigetti because it's Italian. Go ahead.
Because it's Italian. That sounds good. Yeah. Okay. No, Keith can't, because regulatory issues can't say that, which is perfectly fine with me. Bobby, what do you got?
Tim has another comment up here that I wanted to read because it's directly to Sterling. So it's like from, what did I call it? Balcony of Brilliance? From Balcony of Brilliance to Balcony of Brilliance. So Tim says, Sterling, as a former banker, you're correct on the consumer side. On the large CNI and CRE loans, they're all humans involved in credit decisions. I was on 4 Zoom calls today with a life cos and banks. Tim is a commercial real estate broker and banker, just so you know. And then Sterling says, Keith, is your support for Palantir more the tech or the management?
It's both. I mean, again, here's a company that is just putting everything on the map, changing the world we live in. It's, to borrow a Peter Thiel term, 0 to 1. And again, just, my general investing philosophy is that I am not even remotely interested in companies that are N+1 making better mousetraps. I am looking for 0 to 1 companies or companies that are established that have 0 to 1 potential based on a particular product suite, an introduction, a change in structure, whatever it is they're doing has got to have 0 to 1 potential, or I'm not interested.
Fascinating. I love it. This has been outstanding. Bobby, you got nothing else, right?
There's one more by Tim if you want it real quick.
No, I want it. Yeah.
Why are 90% of companies with over 100 million of revenue not going public?
Well, there's a couple answers for that. Number one, because the regulatory burden is so significant that they don't want to deal with it. Number two, it's more profitable to remain private because you have to put up with nonsense. And number three, you don't have somebody constantly looking over your shoulder. So you got shareholders that are truly vested and interested, as opposed to, risking the ire or the agitation of folks who may be contrary to your governance.
I think, Tim, you could also ask your brother that question. Tim's brother runs a very, very large and successful company. It's still private.
Yeah. And again, to me, that seems like the regulatory things would be a mile high, and I can see why they would do that. Anyway, let's wrap it here. I know our producers got to go. Keith, tell them where they can find you on Twitter real quick.
You can find me just Keith Fitz-Gerald or at Fitz_Keith. And apparently there's a lot of imposters running around, so don't get sucked into those guys. I have one blasted account. I will never DM you. I don't have super secret sauce or matching trading or whatever the hell else they call it.
Yeah,
so I'd be honored.
They drive me wild. It makes me so crazy that there's a million of them out there and they go and try to get money from people. By the way, I had a meeting at Brant's once. One of my managers says, "Oh, the guy here's for your meeting." And I walk out and I sit with the guy and he starts the DM. An imposter DM'd him to meet at my restaurant. So I met with the guy and I told him, I don't sell anything. I didn't really contact you. And he was so embarrassed. I said, please don't be embarrassed. Let me buy you a beer. But it was such a weird thing. These guys can be dicks, these imposters. Yeah.
That's great.
Wow.
Yeah.
Wow.
Anyway,
Wow.
We have to play us out right now. Thank you guys so much. The support you've given us in this show is amazing. Thank you to Keith. Bobby, as always, fantastic. Remember Bobby and I's mission. We were in legacy media for a long, long time. We want to create a platform where we can say whatever we want, not have anyone barking over our shoulder about what we're supposed to say and how we're supposed to behave. You guys help us facilitate that. Thank you. This is Tradiers, the Trader's Edge. Please, we take these topics that we talk about and we bring them to our newsletter, the Unfiltered Investor on the Slice app. Please join us there for continuing the conversation. Thank you guys for your support.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.